It's sure been an interesting couple of weeks in the markets. But what I wanted to do is just take a minute or so and try to add a little bit of color, add a little bit of perspective to what's going on. Clearly, the market hates uncertainty. And right now, there's a lot of uncertainty in the world. We're dealing with a new administration who's come in, who's instituting a lot of new policies. DOGE is in trying to cut costs in all parts of the US government. The war issue we're dealing with between Ukraine and Russia. There's a lot of different factors. So the markets, please understand, don't like that. So anytime things are going on like that, you're going to see some market volatility. It's very normal. It's natural for that to occur. But let's try to keep something in perspective. In 2023 and 2024, we saw average returns for moderate types of investors, which are most of our clients, in the neighborhood of 16 to 19% in the last 2 years. This year, we're seeing average returns year to date of about negative 0.1% on average. So you would think when you're listening to the media that we have a huge market event going on. It's just not the case. Yes, the market was up through February, middle of February or so. Market was up 6-7% in general. Yes, that 6 or 7% has been wiped away as a result of all this recent uncertainty. But it's far from being a major market event. In fact, as we put this in the rearview mirror and look at it on a chart, it's going to be yet another blip on the screen. Now, again, I don't have any idea what's going to happen in the coming weeks as a result of this. It could get worse or it could get better. But one thing I do know, when it gets worse or it gets better, it tends to happen very, very quickly. So the best strategy for dealing with a market like this is doing nothing. We have clients calling, wondering if they should move to cash. Or we have clients calling saying, well, should I reduce my exposure to stocks? Or should I increase my exposure to international stocks because international stocks are performing pretty well, or at least not losing currently. But now would be the wrong time to make those adjustments. Instead, we would rather try to focus those adjustments in other times when things are a little bit more stable. Then we can revisit your financial plan and take a thorough look at what the right allocation should be. But chances are, since we've already done that, you're probably in the appropriate allocation between stocks and bonds. So I think the bottom line here is, let's not panic. Let's take it on the chin a little bit, which we always have to do in the markets, always have, always will, and let time kind of take care of this issue. It's happened before, it'll happen again, but let's put it in perspective a little bit. This is far from being a major market event. So let's just be patient. Things will evolve, and as the chart goes on, you'll see that the chart will naturally over time continue to increase despite this recent blip on the screen.